What we can see is a slightly different story. Price displaced above this bearish order block, forming a bullish breaker, meaning price had to remain above this price range for the buy program to continue. What we saw instead is that price displaced below it and is now potentially utilizing the high ends of that breaker, as well as this imbalance here as resistance. So for now, it's not clear because ES is in a buy program, Nasdaq's in a sell program on the daily time frame. And so for now, I'm not paying any attention to this time frame. I'm just going to wait for these time frames to be in sync and then identify drawn liquidity. So my focus is going to be on the lower time frame, such as the hourly time frame. And just to show you, ES is in a buy program because we displaced above this imbalance. We anticipate it being utilized as supports, meaning we're in a buy program and buy size the draw. And when we take a look at Nasdaq, we're in a sell program, we're below this breaker, and so sell size the draw, meaning we have two opposing ideas on correlated markets. That's a huge red flag. That means avoid or drop your time frame and just go into scalping modes, which is what I'm going to be doing. If we now go down to the hourly time frame, what I said in the previous outlook was as long as price would remain above this imbalance here, I anticipate it to be utilized as supports, and the next drawn liquidity was the new week opening gap. And what we can see is that price consolidated within these arrays. We then finally displaced above this imbalance, utilized it as support, and we're now potentially beginning an expansion leg higher. Next drawn liquidity is the new week opening gap, which is internal range liquidity of the previous week's range, where we've taken out external range liquidity. We can now revert to internal range liquidity, and then how we trade the internal range liquidity will determine if we reach external range liquidity. And so on Nasdaq, the next drawn liquidity is this new week opening gap, which is at premium of the previous week's range, as long as price remains above this imbalance. And then how price would trade at this new week opening gap will determine if we're going to continue higher towards external range liquidity, or if we form a high and form a market maker sell model. If, however, price displaced below this imbalance on Nasdaq and below this bullish order block on ES, this would confirm a sell program, and then we can anticipate a market maker sell model. But for now, next drawn liquidity is the new week opening gap, as long as price remains above this imbalance here. That is the game plan. I'm not paying attention to the higher time frames, such as the daily right now, because it's not clear. And so instead, I'm dropping my higher time frame, and I would utilize the hourly time frame to measure order flow, identify draws on liquidity, wait for price to reach a point of interest, and look for market maker models on, for example, the 1 minute time frame. And so if at any point the drawn liquidity is not clear or order flow is not clear on a specific time frame, it just means you need to drop the time frame, go to a smaller fractal, and repeat the process, identify order flow, identify drawn liquidity, wait for price to reach a point of interest, and so on. And so that is the game plan going into the rest of this week. Trade towards a new week opening gap as long as price remains above this price range here. What we can see is that price retraced into it on Thursday, formed a low, and then expanded higher into the new week opening gap. I then put a message in the Telegram saying price utilized the discount arrays as support on price and then expanded higher into the new week opening gap. As long as price remains above the bullish breakers, order flow is bullish and draws on liquidity are higher. This was the breakout I was referring to. And what we can see is that price utilized as support on price and again, and it expanded above the low end of that new week opening gap, utilized the low end as supports. I took a long here and then expanded higher into the high end of that new week opening gap, which was my drawn liquidity. What we can then see is price closed above, failed to utilize the new week opening gap as supports, instead displaced below it, producing a change in the state of delivery. We've now displaced below this bullish breaker, which is now an inverse breaker. And so as long as price would remain below this breaker on Nasdaq and this breaker on ES, price remains in a sell program. Therefore, we target sell sides, simple as that. If, however, price would displace above this breaker and utilize as supports, same on ES, we can then target buy sides because these highs to me are very suspect, they're relatively equal. But because that daily time frame is unclear to me right now, I'm not trying to predict what's going to occur. Remember, it is NFP week, and this week should, post NFP, clear up the order flow for the month, or at least for a couple of weeks during the month, where we have clear, low resistance liquidity runs towards a drawn liquidity. Because for now, it's unclear. I have evidence of higher prices and lower prices, and this is where patience comes in. Just because you think you know where price is going does not mean the price will deliver. It's very important that you remain objective. You don't put your opinion on the market. You just wait for the signatures that tell you, okay, price is going here. What is the invalidation? As long as price remains above or below that invalidation, the drawn liquidity remains intact. And if I was to remain 100% objective, as long as price remains below this inverse breaker, this is my drawn liquidity. This is what I'm targeting. If, however, price would displace above this inverse breaker, meaning displacement above, and utilize it as supports, this is my drawn liquidity. Buy sides. That is very simple, very objective, and that is the game plan going into this week. I don't need to try and predict. I don't need to try and anticipate. I just wait for price to tell me what to do. What you'll also notice is we have this imbalance here that's been utilized as support multiple times. If price displays below it, my invalidation level for the sell program would evolve from this inverse breaker here to this imbalance. And this is the beauty of understanding order flow. When you can find an array that has been utilized as support, support, resistance, 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 support, support, support. That's an important price range. That's IPTA telling you, look at this PD array, and then once broken, it must be utilized as support or resistance. And so that is my game plan going into this NFP week. And of course, I'll update you in the group. So now we can see a slightly different story than on ES, because price displaced above this bearish order block, forming a bullish breaker. We then failed to utilize as support and instead displaced below it, and is now potentially utilizing it as resistance, meaning our next drawn liquidity is November low and beyond. But because ES is in a buy program, as long as you remain above this imbalance, and NASDAQ is in a sell program, as long as you remain below this inverse breaker, I have two opposing draws on liquidity. The drawn liquidity for ES is buy sides, the drawn liquidity for NASDAQ is sell sides, meaning the higher time frame is unclear right now, and so I'm not going to be paying any attention to the daily time frame. I'm just going to be paying attention to the lower time frame until ES and NQ go back in sync on that daily time frame. If we go down to the hourly time frame, what I said in the previous outlook was as long as price would remain below this bullish breaker, which then became an inverse breaker, the next drawn liquidity was sell sides, and what we can see is that price expanded lower, failing to take out the previous week low because ES already did. I then said in the market updates channel, price displaced lower, failing to take out the previous week low as long as price remains below the annotated bearish mitigation block, which is this price range here. Bullish order block on the left side of the curve, once displaced below, becomes a bearish mitigation block. Previous week low, January low, and November low is the drawn liquidity. If, however, price is placed above the bearish mitigation block on NQ, and ES also goes into a buy program, the next drawn liquidity would be previous week high. And it's very important that if NQ produced CSD, this would mean nothing until ES also produced CSD. Ignore the fact that I've reacted to this message. That was an accident. And then what we can see is I put another market update saying price produced CSD on both ES and NQ because we displaced above that bearish breakout on ES and above the bearish mitigation block on NQ. As long as price remains above the annotated discount arrays, the next drawn liquidity is the high of the price gap, which was this price level here on NASDAQ. And what we can see is that price reached into the high of the price gap, as well as that inverse breaker. And so the game plan again is the same. Because we're in a buy program and we've taken out the previous week low, producing SMT, as long as price remains above this price range here, which was a bullish order block on the left side of the curve, once it's placed below, became a bearish mitigation block, and once it's placed back above, becomes a reclaimed bullish order block. Notice how many times it's been utilized as support and resistance. Important price range. As long as price remains above this price range, buy side is my drawn liquidity, meaning I'm going to be looking for market maker buy models. If, however, price is placed below this price range on NASDAQ and displaced below the respective invalidation level on ES, I would then look for sell side targets. And so that's my game plan going into the rest of this week. Look for market maker buy models as long as price remains above this price range. Look for market maker sell models if price is placed below this price range. Very simple, very objective. I did take a short within this price range here. On this move lower, we can see this wick lower and this wick lower. I did take a short, so I will release a trade breakdown for that. Although we failed to utilize this price range as resistance, I still took a winning trade because although this was not an expansion lower, this was just a retracement lower, which is where I made my profits on the sell side of the curve within the market maker buy model. So you can be wrong about the drawn liquidity and still be profitable. What we can see on the daily time frame is a slightly different story. We can see that price displaced above this bearish order block, forming a bullish breaker. In order for order flow to continue being bullish, price had to remain above it. Instead, what we saw is price is placed below it and is now be consolidating. And so, because we're in a sell program, because we remain below this breaker, I have to target sell sides, meaning the drawn liquidity is lower. But on ES, the drawn liquidity is higher, and so I'm pretty much ignoring the higher time frame because, just to show you again, on ES, price remains in a buy program as long as you remain above this imbalance here. Whereas if we take a look at NASDAQ, price remains in a sell program as long as price remains below this imbalance here. If we displaced above it, that would confirm it back into a buy program, and then ES and NQ would be in sync. Or if ES were displaced below that imbalance, this would confirm that ES and NQ are both in a sell program, and then we can target sell sides. So for now, it's just a matter of waiting for these markets to be in sync on the higher time frame. And so for that reason, my focus is on the lower time frame, such as the hourly time frame. If you now go down to the hourly time frame, what I said in the previous outlook was as long as price would remain above this price range here, which was a bullish order block, which became a bearish mitigation block, which then became a bullish reclaimed order block. As long as price remained above it, drawn liquidity was buy sides. And what we can see is that price retraced into it, formed a low, and then expanded higher above the previous day high. I then put a couple messages in the Telegram yesterday saying as long as price remains above the inverse breaker on ES and the bullish breaker on NASDAQ, this was the bullish breaker here that we just looked at, the buy program remains intact and the drawn liquidity is buy sides. If, however, price were displaced below these arrays, this would invalidate the buy program and sell side would be the draw. Because this was the breaker here, price retraced into it, as anticipating price forming a low, to then expand higher into buy sides. And what we can see is that's what exactly occurred. Price retraced into the breaker, formed a low, and then expanded higher into the previous day high and into this imbalance here. Then during the PM session, I put another message in the Telegram saying as long as price would remain above these H1 imbalances, order flow remains bullish and the drawn liquidity is higher. I have no idea why there is a whale emoji here, but fair enough. And so these imbalances were the ones that I was annotating, this imbalance on ES and this imbalance on NASDAQ. I said as long as price remains above this price range, drawn liquidity is higher. And what we can see is that price retraced lower, formed a low, and then expanded higher into this imbalance here. So going into NFP, the scenarios I'm looking for are the following. As long as price remains above this imbalance here, this bullish fair value gap, the next drawn liquidity is buy sides. If, however, price displaced below this imbalance on NASDAQ and on ES, this would confirm a high formation and then I would look for sell side targets. I also see this imbalance here. If price were displaced above it on NASDAQ, this would then become my new invalidation for the buy program. And so at that point, it must be utilized as support. So either I'm looking for retracement lower into this price range, form a low, so then expands higher, or I'm looking for expansion higher above this imbalance, utilize as support to then continue higher, or price will displace below this imbalance, producing a change in the state delivery on NASDAQ and as well on ES, form a high, and then expand lower into sell sides. Remember, it's NFP tomorrow, and anything can occur. Our analysis can go completely out the window, but this is the importance of remaining objective because we don't care what occurs. All we care about is our analysis specific? Is it objective? Is there no emotion, no discretion? We're not putting our biases on what we want to see. All I'm saying is, if this occurs, then this is likely to occur. If price remains above this imbalance, then the drawn liquidity is buy sides. If price would displace above this imbalance, then as long as price remain above it, the drawn liquidity would be buy sides. If price would displace below this imbalance and form a high, then the drawn liquidity would be sell sides. That is objective, that is specific, and that is the key to algorithmic trading. What we can see on the daily time frame is that price remains in a sell program because we produced a change in the state delivery after taking out the December low, and so we can anticipate price reverting to the December high. We displaced above this bearish order block, which became a bullish breaker, where we had a low, high, lower low, higher high. We displaced above it, then back below it, meaning we went back into a sell program, meaning for now, sell side is the draw. But because ES is in a buy program, this daily time frame is out of sync, and therefore I'm not paying attention to the daily time frame. We're also just consolidating, and so for now, I have two opposing ideas. If both ES and NQ went into a buy program, this would confirm that all-time highs is the next drawn liquidity, as well as potentially the 23,000 price level. Or if ES goes into a sell program, meaning it's in sync with NASDAQ, this would then confirm that sell side is the draw. If I was to choose what was to occur, what I would like to see is for ES to continue higher, taking out all-time highs, rejecting the 6,200 price level, form a high, I would then want NASDAQ to fail to take out all-time highs, because remember this is the previous year high, producing SMT, meaning ES took out previous year high, and NASDAQ failed to do so, producing SMT. And then I would like to see a high formation, and then we can look for sell-side targets. That is the scenario that I would love to see, where ES takes out all-time highs, NASDAQ fails to do so, producing SMT, and then we can in fact see a market maker sell model unfolds. But for now, it's unclear, and so I'm just going to wait for both markets on this time frame to be in sync. If we now go down to the hourly time frame, what I said in the previous outlook was as long as price will remain above this imbalance here, this bullish fair value gap, then the next drawn liquidity would be buy sides, being the previous week high. And if price were to displace above this imbalance, this would then become the invalidation for the buy program. And what we can see is that price took out the previous week high on NASDAQ, failed to do so on ES, producing SMT. We also closed above this imbalance, which became the new invalidation level. Price then displaced below this imbalance, producing a change in the state of delivery, validating the SMT at the highs, meaning now we have SMT on both sides, SMT relative to the previous week low, and SMT relative to the previous week high. Low probability conditions right now. And so in order for me to confirm a buy program again, meaning the drawn liquidity would be buy sides, I would need NASDAQ to displace back above this imbalance, utilize that support to confirm that buy side is the draw. What would I need to see to confirm sell side is the draw? Well, because NASDAQ is already in a sell program, and ES has now reverted to equilibrium of this previous week's range, I would want ES to displace below this bullish order block that formed exactly at equilibrium. If ES were displaced below it, this would confirm that ES and NQ are now in a sell program, and then we can look for sell side targets. Meaning, as long as ES remains below this imbalance here, and NASDAQ remains below this imbalance here, we're in a sell program. But in order for me to confirm that the drawn liquidity is lower, being sell sides, because NASDAQ's already in a sell program, I would also want ES to displace below this price range here, to say, okay, we're no longer going to continue towards the previous week high, but in fact, this is a market maker sell model, and displacement below this bullish order block would confirm that. And so for now, the game plan is to wait for either price to displace above this imbalance on ES and NQ, confirming buy side is the draw, or I would need ES to displace below that bullish order block, confirming that sell side is the draw. Because we have SMT on both sides, relative to the previous week high and the previous week low, this is low probability. When you have SMT on both sides, this signals that these markets are out of sync. NASDAQ is moving higher, ES is moving lower, and therefore we're in low probability conditions. But that is my game plan going into CPI. I will look at the markets during Monday, Wednesday, Thursday and Friday. I'll avoid Tuesday due to the fact it's CPI. And hopefully CPI will clear up current price action, because just to remind you, we are just stuck inside of this consolidation on NASDAQ and on ES. And so hopefully CPI will validate a new drawn liquidity, either being buy side or sell side. But for now, just remaining objective, and I'm going to be patient to identify a high probability drawn liquidity where both ES and NQ are in sync.